Euro USD has just formed a head and shoulders pattern at a major resistance level. Now, the neckline was just broken recently, and I'm about to show you two ways that you could easily catch 20 to 30 pips to the downside over the next day or two. Okay, so to start off, Euro USD has formed a head and shoulders at a major resistance level. So looking left, we can see that price has a resistance level in this area here. We drag it onto the right and we notice that we had a nice wick at that level. So if we drop down to the lower time frame, we can see a little more detail about what's going on. So the 1 hour doesn't exactly show. We can see a left shoulder, head, and right shoulder, but I believe that the 30-minute time frame is a little more detailed. So let's jump down to it. So right here, we could easily see that we have the left shoulder here with the head right there and then the right shoulder right there. So what we're looking for a good entry is a break of this neckline, which we have. So two ways that we could enter is we could enter right now, very aggressive, and shoot for the downside. Or we could be a little more conservative and wait for price to print one or two green candles, retest, and then come back down, right? So what we're not just looking for price to touch this neckline before shooting down. What we're waiting for is it to print a couple green candles and then print a bearish candle. That bearish candle close is our confirmation of a rejected neckline. If we just wait for price to touch it without any bearish candle, then there's no resistance formed at that neckline. Once that bearish candle has formed at the neckline, that's our confirmation for a more conservative entry. So where do we target? What's our stop loss? Our target is going to be 3/4 height of the pattern. And the way that we can measure this is we can get our price range here, and we can measure from the neckline to the head, or we can measure from the neckline to the shoulder. So if you're a little more conservative, you can do neckline to shoulder. If you're a little more aggressive, you can do neckline to the height of the head there. Okay, and since we're doing 3/4 of that, what we could do, let's have two targets. First one, we're going to go for the head. That's going to be 50. So then our take profit is going to be roughly 37, 38 pips. About right there. Okay, so this could be our first target. Let's do a short right there. And then the stop loss can be a 2-to-1, or in my opinion, you can be way more conservative and just put it right above that right shoulder. Okay, because if price ends up breaking above this neckline, we're basically wrong anyway. So there's no need to risk a whole 2-to-1 risk reward ratio. And that's what's so perfect about these patterns. The next one is going to be this shoulder height here. We can go ahead and drag this down and get a distance for that. This is going to be our second target, or our first target essentially. And then this is going to be about 15 pips. So right there. And stop loss at the height again. Okay, so since the shoulder is a lower take profit, that could be our first target. And then the head, since that's a larger take profit, that could be our second target. So what that could kind of look like at a live trade is once it hits our first target, we can close 50% of the position, or 25%, whatever you want. Put stop loss at take profit or break even, and then our second target could be all the way down here for that 40 pip range. Okay, so I'll make a video on the aftermath of this pattern, if it played out, if it didn't play out. Let me know if you guys took this trade in the comments or on the next video, and I'll see you there.